Welcome back everyone.
Well, hello.
Today I'll talk about the fascinating journey of MicroStrategy, a company that went from struggling to stay afloat to becoming a major player in the Bitcoin space, all thanks to one man's bold decision to invest in Bitcoin. So, grab your popcorn and let's get started.
Yes.
MicroStrategy was founded in 1989 by Michael Saylor and Sunji Bansal. Initially, it was a software company focused on business intelligence, mobile software, and cloud-based services. Their flagship product, MicroStrategy Analytics, helped organizations make sense of vast amount of data. The company then went public in June 1998, and for a while, it seemed like smooth sailing.
There's all sorts of intelligence out there. There's music intelligence and sports intelligence, and Google does their more than their fair share, and so does Amazon with shopping intelligence. Our focus is analytics and mobility intelligence for the enterprise.
MicroStrategy enjoyed a significant growth in the late 90s, riding the wave of the dot-com boom. But like many tech companies of that era, they faced a massive setback when the bubble burst in 2000.
We're red everywhere, essentially, down by 4-5%.
Because we're now down 43%.
What in the world is happening on Wall Street?
I don't know.
An accounting scandal further compounded their problems, leading to a significant drop in their stock price. Throughout the early 2000s, MicroStrategy struggled to regain its footing. The company continued to develop and improve its software products, but the financial challenges were persistent. By mid-2010, it was clear that something needed to change if MicroStrategy was going to survive and thrive.
We realized that if we wanted to move into the next era, we were going to have to embrace a new set of technology trends.
Despite their best efforts, the company's revenues were stagnating and they were losing money. It was around this time that Michael Saylor started to look for innovative ways to turn things around. First, they thought about stock buybacks, where MicroStrategy could have used its own cash reserves to buy back its own shares. This would reduce the number of outstanding shares and potentially increase the stock price. While this might have provided a temporary boost to the stock price, it wouldn't solve the underlying issues of revenue stagnation, and it would lead to a slow death of the company because it wouldn't fundamentally improve the business.
What a waste that is.
They thought about reinvesting their cash back into the business through company acquisitions. While reinvestment is crucial, MicroStrategy was already struggling with stagnation, and further investment in a saturated and highly competitive market might not yield significant returns, leading to a fast death if these new unproven ventures fail.
It can buy other companies, it can spend on research and development, it can buy new equipment, buildings, or technologies, or it can return money to shareholders. This can take the form of dividends or stock buybacks.
And so, in 2020, with the global economy reeling from its pandemic, Michael Saylor made an ultimate decision. He proposed that MicroStrategy invest a significant portion of its treasury into Bitcoin. His rationale was simple. Traditional assets like cash were depreciating in value due to inflation, while Bitcoin, with its fixed supply, presented a compelling store of value.
And after we looked at all the options, we concluded that Bitcoin was the best option because it's a commodity, not a security. And there are a lot of technical benefits to a publicly traded company owning a commodity or property.
Despite the initial skepticism from the board and investors, Saylor's conviction won out.
What's the second best? There is no second best. There's no second best crypto asset.
In August 2020, MicroStrategy announced the purchase of $25 million worth of Bitcoin. This was followed by another purchase in September, bringing their total investment to $425 million.
You're rich.
To further fuel their Bitcoin buying spree, MicroStrategy didn't just rely on its cash reserves. The company issued convertible and senior secured notes, raising over $1.6 billion in debt. This move was risky, but Saylor believed in the long-term potential of Bitcoin. Plus, their interest for their debt was less than 1%, which was fixed for around 5 to 10 years.
And we ended up making it a $650 million bond. The nice thing about that bond is it was struck with a very low coupon, about 75 basis points. So it's 0.75% interest, and it was unsecured, no recourse. So in essence, we just borrow the money in a bond, pay 0.75% interest for about 5 years. And then we took that $650 million and we bought Bitcoin with it.
By leveraging debt, MicroStrategy was able to significantly increase its Bitcoin holdings without depleting its cash reserves. This bold strategy paid off as Bitcoin's price surged, increasing the value of their investment. Today, MicroStrategy continues to dollar-cost average Bitcoin regardless of its market price. As of now, the company actually holds 1% of the entire Bitcoin that will ever exist. Saylor's decision to pivot MicroStrategy's strategy towards Bitcoin has not only revived the company's fortunes, but also positioned it as a leader in a corporate Bitcoin adaptation movement. Many other companies have since followed suit, inspired by MicroStrategy's success. Companies like Tesla, Metaplanet, Semler Scientific, and very soon, we could potentially see Dell Technologies add Bitcoin in their balance sheet.
Is that so?
Yes, that's so.
Now, let's talk about why I decided to invest in MicroStrategy and why you might want to consider it too. Investing in MicroStrategy is like a leverage play to Bitcoin because MicroStrategy owns 1% of all the Bitcoin in existence. The stock price tends to move upwards in line with the Bitcoin price. The reason MicroStrategy can buy so much Bitcoin is due to its strategic use of debt. They issue convertible notes and other debt instruments at relatively low interest rates to fund their Bitcoin purchases. This leverage allows them to amplify their exposure to the Bitcoin price movements.
I want to try the move.
So, how can we, as retail investors, replicate this strategy? One approach is to use low-interest debt to buy Bitcoin. By taking out loans with low annual percentage rates, APRs, you can purchase Bitcoin with the expectation that its value will increase over 5 years, outpacing the interest for your debt. People get into debt to buy a house all the time. People go to university and get student loans all the time. Would you consider those to be the best investments?
I don't think so.
Investing in MicroStrategy has several benefits. First, it allows investors to gain exposure to Bitcoin without directly owning the underlying asset. This can be especially advantageous for those who prefer not to deal with the complexities of storing and securing Bitcoin by themselves. Also, holding MicroStrategy stock in an individual savings account, ISA, can provide tax benefits. Any gains made from the stock are tax-free within an ISA, making it an attractive option for long-term investors. In America, this can be achieved through a Roth IRA.
We were able to appeal to a variety of investment classes. One class of investors is public company investors. They want Bitcoin exposure. They can't buy Bitcoin. They can't buy the Bitcoin ETF. They can buy a company that does something with Bitcoin. It's like I can buy a gold miner, but I can't buy the gold and I can't buy the gold ETF.
Yes.
There's another class of investors, the Bitcoin maximalists. They love Bitcoin, but they have money in their 401k, and they can't buy Bitcoin with their 401k, but they can buy a stock like MicroStrategy. Now, why would they like us? Well, would you like to be able to borrow money for 7 years for no interest?
Exactly.
And buy
It's like
Bitcoin?
free money.
You would like to, but you can't.
Yes.
But we can. So if you like that prospect, they would buy our stock because they feel like they're along for the ride, right? They're getting advantage of our ability to get cheap capital to buy Bitcoin.
Another reason to consider MicroStrategy over the spot Bitcoin ETFs is the ownership structure. Unlike ETFs owned by major corporations like BlackRock and Fidelity, MicroStrategy is independent and holds Bitcoin with the intention of never selling. This aligns more with Bitcoin's ethos of decentralization and taking power away from traditional financial institutions.
We became the most notable, premier, and most transparent company. You know, with MicroStrategy, we're going to buy Bitcoin, keep it, and try to accrete more Bitcoin per share.
You buying again?
Certainly.
While BlackRock and other institutions might trade in and out of Bitcoin for their clients, MicroStrategy's rule is simple: to hold and accumulate. This long-term approach can provide more stability and greater returns for investors. It's also better than a spot Bitcoin ETFs because it does not incur management fees. Spot Bitcoin ETFs charges an annual expense, which is a percentage of the total assets under management. This fee is deducted from the returns and can be 2% or more. Over time, these fees can significantly erode your investment returns. Investing in MicroStrategy is better than investing in leveraged ETFs for the long term. Leveraged ETFs aim to provide multiples of MicroStrategy's daily performance. To achieve this, they rebalance their holdings every day. This rebalancing process can lead to a compounding effect that causes the ETF's performance to change from the expected multiple of MicroStrategy. For example, in highly volatile stock like MicroStrategy, the daily rebalancing can cause leveraged ETFs to lose value over time, even if MicroStrategy long-term trends upwards. This is known as decay or slippage.
I got scammed, Daddy.
And so, investing in MicroStrategy provides a unique opportunity to gain leveraged exposure to Bitcoin without the drawbacks of management fees and performance decay associated with leveraged ETFs. This makes MicroStrategy the best alternative for those looking to maximize their investment in Bitcoin.
I don't think so.
MicroStrategy's journey from a struggling software business to a major Bitcoin development company is just remarkable. Michael Saylor's bold bet to go all in on Bitcoin has paid off, proving that Bitcoin is the best asset class ever came into existence.
You do not sell your Bitcoin. What do I mean? Bitcoin is energy. Bitcoin is life. Don't squander your life. Conserve your energy. Don't let the fire go out. When the fire is what keeps your family from freezing, do not let the fire go out. Right? You have a life, it's beautiful, you can do beautiful things. Don't throw yourself off a cliff. Satoshi gave you economic energy. You can capture it, you can own it, you can conserve it. Don't throw it away. Every time you sold it, you gave up the best performing asset in the world to buy what? Everything else is inferior.
I hope this doesn't mean we can't be friends.
If you found this story fascinating as I did, don't forget to like and comment below what you think. Watch this video next where I talk about why you should invest in Bitcoin. See you there.